told us that you are upbeat about Q2 growth, that we'll begin to see a pickup in Q2. Give us a sense of how strong those Q2 numbers are expected to be, given where we are right now.
Well, the numbers are going to be actually are going to come out on August 10th, and we think they're going to look pretty good. But I'm not going to say exactly what they are now. And but I think from what we've seen in May, where our unemployment numbers have dropped, our underemployment has dropped. And in fact, the fact that we have created about 2.5 million new jobs over the last year seems to be good signs for us.
Quantify that for us. Numbers expected to be quite good. If you can't give us a specific number, will it be a double-digit growth? Is there a range you can provide?
No. I'm not into. I'm not big in predictions, but I think it will be pretty good. And actually,
will it be enough?
Beg your pardon?
Will it be enough for you to hit your growth target of 4 to 6% for the year?
Yes, I think it's going to be in that range. Yes.
What do you say to the World Bank?
Go on,
Haslinda.
Rish.
What do you say to the World Bank saying that your growth for the year will be just 4.7%?
Well, that's their prediction. And as I said, we are going to have another meeting of our DBCC, which is our Development Budget Coordinating Committee, shortly after we see the numbers on August 10th to really look at what we're going to have for the next 7 or 8 months.
All right, Secretary, what more can you do fiscally to begin with here to alleviate the plight of Filipino people here at the moment and restore lost incomes and prevent deep social scarring, in essence?
Well, our basic policy is to invest in the productive parts of our economy. And we also believe that the private sector is going to be the lead in the recovery of our economy. And that's why our CREATE bill, the CREATE law, has actually dropped our corporate income tax rate from 30% to 25% for large companies and from 30% to 20% for the small and medium-sized companies. We look at this as a very strong fiscal stimulus, and the creation of jobs will certainly go a long way to alleviate the scarring, as you say, of the 50% lower income bracket in our country.
The other thing is, you know, on the monetary policy side here as well, do you think, I know you are a member, of course, of the body, the Central Bank's Monetary Board, do you think you've done enough in terms of support here for the financial system? And indeed, ultimately, are you happy where the rates are at the moment, or could you possibly even see another cut on the horizon?
Well, let's put it this way. I think the Monetary Board has acted properly, and up to now, they have done quite a bit of their share. And we just want you to know that we still have a lot more to go before us. And this is because our reserve requirements are still quite high at 12%. And there's certainly rooms in the future, if necessary, to release more liquidity into the market through a reduction in the reserve requirement. And that will certainly put downward pressure on interest rates.
Secretary Dominguez, the governor is pretty upbeat about the prospects for the country, but when you take a look at the peso, it is weak. The second worst performer in Asia over the past 3 months. Investors are not buying into that story. Do you think the peso reflects the fundamentals of the Philippine economy?
Well, the actual peso has actually, if you take a look at the entire pandemic period, has actually strengthened. And the recent drop in the value of the peso is to be expected as our economy opens and there is more demand for dollars as we import more. So that is a natural reaction, and we think that the market is reacting properly to the signals that are going on. And the signal essentially is that there is recovery along the way, and it's reflected in the increase in demand of dollars for imports.
Fitch, though, not really buying into that. It cut its outlook for the Philippines. Is there a risk of a downgrade, you think? What do you make of the move made by Fitch?
Well, let's distinguish between a downgrade and a change in outlook, okay? A downgrade is when you go from A minus to BBB plus. A downgrade is when you go from BBB plus to BBB minus. And there are three countries in our rating tiers that have done this. Now, India, Peru, and us, they have just changed the negative outlook. And, that is reasonable because of the fear of, I think, the pandemic coming back. So I think they're okay in doing that. But let's also remember that Fitch is only one of about 4 or 5 rating agencies. Let's wait for what the other guys say.
Secretary Dominguez, let's have a look at your borrowing plans looking ahead to next year. Are they going to be broadly the same as this year? And in terms of raising money, I mean, how likely are you to go to the dollar bond market?
Yes, broadly, it will be roughly the same for this year as it was last year. And basically, it's about 75% domestic and 25% international, depending on the situation in the market. So we are keeping ourselves open to financing from domestic or international sources. And essentially, it's going to be about the same amounts.
Secretary, I know this is asking you how long a piece of string is in essence, but how do you see the whole COVID pandemic there in the Philippines panning out? Do you see light at the end of the tunnel? This is going to be vital in terms of what you do next.
From the beginning, and I think Haslinda will remember, I've never said that there was going to be a silver bullet to this thing. I think the pandemic is going to be with us for some time. And exactly, we have acted in a way that is fiscally responsible. We want to make sure that we have enough resources to tackle any problems in the future, such as surges in the pandemic. We also want to make sure that we have enough money to protect our citizens, and that is providing them with enough vaccines. Actually, we have a very good vaccine procurement program. So far, we have received for the first half of the year until July 21st, close to 30 million doses. We expect 70 million doses or around that amount in the third quarter, and another 55 million doses in the last quarter of the year. That's certainly enough to vaccinate 100% of our adult population. So that is our primary method of fighting this vaccine. Of course, as there are surges, we will institute lockdowns in specific areas where the surges occur.
Secretary Dominguez, speaking of having enough money, your debt to GDP ratio currently stands at 60.4%. Is that sustainable?
Yes. Well, yes, because we don't see that increasing much beyond that amount. We think that's about the peak. And we think that starting next year, our deficit is going to go down to around 7.5%, and from there steadily down to where it was in 2019.
When do you think you'll get to pre-pandemic levels? What are you doing about it?
To get to pre-pandemic levels, we think, I would say, late 2022 and early 2023. Back to the numbers we were having in 2019.
Will you be plugging your revenue leaks, and how will you be raising more money to finance your spending plans?
Well, first of all, we rely on our own tax collections. And we're happy to say that in the first 5 months of this year, our tax collections are already up by about 13% from last year's. And as I said, we have to make sure that we manage the economy in a fiscally responsible way so that in case we still have shortages, which we will be able to access the credit markets.
Secretary Dominguez, before we let you go, your colleagues, 5 of them, including the likes of Janet Yellen and also Srimulani Indrawadi, they came out with an op-ed, I guess, giving credence to that global minimum corporate income tax. Your thoughts on that?
Yes, we are 100% supportive of a move towards managing the worldwide income tax situation, and we will support initiatives in those areas.